Hey everybody, welcome to February. January seemed to fly by. It was kind of an odd month in the London, Ontario real estate market, and the headlines have been flowing hot and heavy since Elstar released their stat pack at the end of last week. All the headlines are prices are down 25% since last year, sales are at an all-time low, and the real estate market is crashing. Everyone's about to sell because no one can afford their soaring variable rate mortgage, okay? Those are the headlines, and that's what everyone wants you to read, because if it leads, it leads. That's what we always say when it comes to the media. They're gonna sell you something that is clickbaity, maybe, to get you to click on their article and read some statistics. Those are facts, those stats are not wrong, but I want to provide a different perspective on those stats, mainly sales prices and sales numbers, because those headlines paint one picture. I would like to give a different perspective on those numbers over a larger time span, because I think comparing January 2023 to January 2022, we're comparing like apples to orange Lamborghinis, because last year the market was completely different, right? Everyone was trying to buy real estate because everyone else was trying to buy real estate, right? We had that fear of missing out. Nobody wanted to be left behind. And at the same time, everybody had a 2% 5-year fixed rate in their back pocket so they could go out and spend like crazy. And that's what we had, really high sale prices and really strong sales numbers to begin last year. We're not there, right? We've reverted back to what would be considered a more normal 5-year fixed rate around 5%, historically fairly attractive. I know anyone that thought about buying real estate over the past 5 years thinks that sucks, but the reality is that's not a bad rate if we look at historical numbers. The first thing I want to talk about is sales numbers. And last month, sales numbers were low compared to the 5-year average. And that sounds bad. If we were to say something like, we had the least number of sales in January since 2009, that sounds bad. If we were to then say, January compared to the 5-year average was stronger than the previous 6 months, that sounds positive. Sounds like we're selling more real estate, right? And that's what happened. Saying that we had low numbers historically last month is no different than saying we had low numbers historically for the last half of last year, which was true. We didn't have a ton of sales in 2022 because interest rates are rising, people aren't buying. They weren't as confident. So I took a look at the stats here, and what I did was I took the January sales numbers compared to the 5-year average from the previous 5 Januaries, and last month, 247 sales, which would make up about 70% of the 5-year average. So we would have expected 30% more sales. What I also did was compare the last half of last year. And beginning in June, we had sales to the average 5-year average. There's no title here. Sales to the 5-year average of 63% in June, 56% in July, 63% in August, 60% in September, 57% in October, 61% in November, and 62% in December. So 70% compared to all of those numbers for the last half of last year seems pretty good. Am I wrong? So let's put things in perspective. We got one headline, now we've got this. Last year from June till December, anywhere from 56 to 63% of the 5-year average. Those are the sales we were seeing. So January, in that context, seems kind of strong. Okay? You pick your poison, all right? I'm just giving you a different perspective. The other thing that I wanted to say when it comes to sales numbers in January provides an outlook that has a little bit of momentum. There was a pretty strong announcement made by the Bank of Canada last month on the 25th. That seems like an eternity ago, but it was just a couple weeks ago. They said we're raising the overnight interest rate by 1/4 point, and we're hoping to leave it there for the time being, which is great news for a home buyer. So that was the 25th. So what I did is I wanted to look at the number of sales before that announcement versus after that announcement. And what I found was actually pretty interesting, because 25 days out of 30, that's majority of the month, right? That's like 83 something percent. And what we had was 140 sales in the first part of the month. After that, we had almost 80 sales. That's a lot of sales to happen in the last week of January compared to the previous 3.5 weeks. So that's telling me that things are starting to pick up. We've got a little bit of momentum after the Bank of Canada rate announcement for the end of January. All right. Now keep in mind, March, first week of March coming up, we're going to have another rate announcement. So that will be very big. Foreshadow. If they leave interest rates flat, go time. Okay. Now, let's talk sale prices, all right? Because yes, we're down 25% year over year, January 2023 to January 2022. Again, if that's the headline, that sounds bad. That sounds negative, right? It sounds like, oh no, the sky is falling and real estate is worthless. Let's compare where we're at right now to 2020, because we're about on par or maybe a little bit less average sale price to January 2021, but we're up big since January of 2020, 27% to be exact. So from 3 years ago to today, we've gained 27%, 9% a year. That's pretty solid. If you were to tell me that I could get 9% a year return on anything, I would give you all of the money that I had available to me. Take it, give me my 9% year over year. I'm good for the rest of my life. I'll just do that and I'm happy. Okay? So saying that average sale price from 1 year to the next, where you had a historically crazy and hard to fathom market to something that's a little bit more normal, is not a good comparison. 3 years ago, the average sale price has gone up 27%. Detached houses are up 26% in that same time span. Semi-detached houses are up 40% in that same time span. Boom. And attached houses, think condos, townhouses, apartments, things like that, are up 36%. I will take any of those. If I could buy a house today and 3 years from now you're going to tell me that it's up 27%, I'm very much on board for that. That's the market update, and it's basically a counterpunch to all the headlines out there that say the sky is falling, real estate is going to crash, sales numbers are terrible, trying to deteriorate any confidence that anyone has in the market. Again, thank you very much for tuning in with me. I'm going to do a market update at the beginning of every month. I really just want to take a deeper dive beyond the headline numbers, the real attention-grabbing statistics, and give you an insight into what is really happening in the market. Because personally, I'm feeling momentum building in the real estate market in London, across Ontario. We could be in for a very, very strong spring. Again, let's fast forward 4 or 5 weeks to that Bank of Canada announcement. Very excited to see what happens there. Happy February, everyone. We'll check you out again for our market update at the beginning of March. Cheers.